a preview for the non-farm payrolls. So this is a preview for the non-farm payrolls report released in the United States on Friday, July 8th, 12:30 GMT. Usually first Friday of the month, this time 1 week afterwards. So we have a full buildup, and what we want to see is a bounce. April was weak, revised to the downside in May. May was terrible. In May, we had only 38,000 jobs gained, partially blamed on the strike in Verizon. Now we'll have the chance to see if that was really temporary or not. It's not only the strike in Verizon. The good news, the silver lining, is that the US might be getting closer to full employment, but with the low participation rate, it's hard to believe that. Remember, the participation rate fell once again, 62.6, and the unemployment rate fell, but nobody really cheered because less people are participating. Okay, this was very worrying for the Fed. I mentioned this before, that Yellen is worried. She said, okay, one jobs report doesn't tell us anything, but actually it's already 2 jobs reports also for April. It was around 80,000 after revisions, and we really want to see a bounce. The latest jobs report pushed back another rate hike even before Brexit, okay? What are we expecting this time? We're expecting a rise to a rise of jobs of 174,000, so back to normal levels of around, well, close around 200,000. That will be much needed. Also, revisions will be watched, especially related to Verizon. Average hourly earnings, they used to be, until last month's report or until April's report, they used to be very important because job gains were so steady that the focus was, okay, we're getting closer to full employment. Now we should see wages rise. They did rise, actually, also very gradual, very slowly. The good news from last month's report is that they remain stable at 2.5 year-over-year and 0.2 month-over-month. We're expecting exactly the same this time. I would say that a jobs report, okay, of 170,000, not perfect, but good enough, and with wages rising above 2.5% is good news for the dollar, especially against the yen, but also against other currencies, risk assets, everything, okay? It doesn't mean that the Fed will raise rates anytime soon, but it shows that the US economy is stronger, it can lead the world forward, and we might have a rate hike in December after the elections. At the moment, a rate hike in July is off the cards. This will not change the picture unless, I don't know, we have 500,000 jobs gained and 4%. In any case, unrealistic. September, there's a press conference and also a new dot plot, but I don't think, because of Brexit and because of other reasons, it's still too early. December is the only option, and also for December, chances are low. Okay, if we have another week report of under 100,000, but also 150,000 would be bad enough because markets are sensitive, and mediocre or only okay rises in wages, then we could have another fall of the US dollar, mostly against the Japanese yen. Yeah, okay. The non-farm payrolls may be a bit less important with the hike off the cards, but it's still the king of events. Remember, with the NFP, things that are always true. It's a messy event. It's a big event. The liquidity is quite low, or in the minutes around the event, we often see a move to one direction to catch some stops, only to be followed by a move to the totally other direction. As always, trade with care. The real direction usually emerges after 30 minutes. If we have wages and job gains going in the same direction, that'll have a clearer impact. But we had in many months wages disappointing and jobs growth looking okay, or the other way around, and then we had a very messy outcome. So trade with care. Okay, that concludes our non-farm payrolls preview.